Okay. No way. All right, hold tight. Let me finish up. Is that a pizza? A pizza for you too. Haha. Miso fly. Miso fly. Okay. Let's get the ball rolling. Let's see who's here this evening. Hello, hello, hello. Who do we got? Miso fly. JT Electric. Good evening. Bulldog Mark. Jonathan Kenner. Beauty Style Gra. G-R-A. Really? Beauty Style Gra? Beauty Styling. Okay. Gotta love it. LG. Jonathan. How you doing, Jonathan? Can you try Kohl? Oh, no. Okay. Tech is here. Mark. Daryl. Good evening, Daryl. Mark the Plumber. Sam Reed. Twisted Philly. Back again. Crypto Simon. Oh, Crypto Simon. How are you today? Zoe. What's happening there, Zoe? DL. What's going on? Jennifer. Is that one of those? Yeah. Yes, it is. I'm having a little indigestion problem, so I'm thinking it's going to help out. Big Corey checking in. Way to go, Mr. Big Corey. Yay. Jonathan, good evening. A lovely 888. All right. Juan, good evening. Alrighty. So we seem to be live in all 7. Oh, wait a second. Got to start streaming. And come on. There it goes. Start streaming. Cool beans. Now, where are we? We are right here. Alrighty. I think we are ready to roll. David, good evening. King, good evening. Sparky. Chanley. Jay, what's going on? All right, so let's do this. What do you have over here? Juan. Cybertonic. Adam, good evening there, Adam. Ali Farah, good evening. Bishop, good evening. Dusty, what's going on? Emmer, good evening. J-Lock. Chanley. Eva. Match 4. Bushil. Pierce. Dark Matter. Okay. Old Dog. Old Dog is in the house. All righty. All right, that being said, Thawkins back again, I see. All right. Who do we have here? Your bon échange. Bonjour, bonsoir. You look like Bill Neal, the science guy. That's Bill Nye. Bill Nye, the science guy. What's your opinion on Mark Carney and how his presence could help with my sobriety? I have no idea who Mark Carney is, but thank you anyway. All right. Bonjour, bonsoir. Comment ça va toujours? Ça va bien? La Boo Boo Girl. What's up, dude? Not much. How you doing? Can you say happy birthday? All right, Crusader, how are you? Said hi. Good. Bricky, Austin. Okay, let's get the ball rolling. And what do we have? I'd like to cover your barbecue sauce. Okay. Alrighty. Her name is Zoe. Thank you there, Miss Kate. Hipacho, good evening. Flip Farms. Yo, that's not even true. Those were the facts and truths behind such a bold statement. It's extremely unrealistic and quite frankly, completely hedonistic. You lack... Oh, really? Perspicacity. Wait a minute. What is that? Perspicacity and substance. I got no idea what the hell you're talking about. But okay, that's the way you want to go. Not a problem. Hercules, how you doing? Flip Farms, you don't really need to be here if you're going to be negative. He's trying to say he wants to cover you in barbecue sauce. Yeah, that ain't going to happen. Somebody needs to go back to spelling class. I think they do. Swami, James, there is moisture outside the glass. All right, whatever. Okay, so let's get the ball rolling. Good evening, everyone. Oh, who do we have over here? Lucia, good evening. Maria, good evening. Azaria Pippin, good evening. What are you teaching? We're teaching dividend investing for weekly cash flow. Now I'm looking for a simple, safe, predictable, consistent 1% per week. That's over 50% per year, just in case you were wondering. That being said, I wish somebody would. All right, anyway. Why did the math book? All right, I'm not going to do this. If you'd like. All right. Why don't. All right. I'm not even going to bother this anymore. Alex! Okay, should I roll my Kohls? Oh, hold on. Alex got a good question. Hold the phone. All right. Alex wants to take a look at Kohls. I love Kohls. God, oh my goodness. Stop interrupting this, man. I'm trying to look for the statistics. I'm trying to make some money. Thank you there, Hebrew. All right, so. Oh, thank you there, writer. That's very nice of you. Kind. Thank you. My 4 children would love to hear your opinion. All righty. So, that being said, let's get the ball rolling. First and foremost, my name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, showing you exactly what I do, answering whatever questions you have. I will take a look at whatever stock you want. However, I would like just a couple of rules. Number one, if you don't have something nice to say, you don't really need to be here, okay? Me, for one, I don't really want to hear it. And I'm pretty sure anybody that comes through here doesn't probably want to hear it either, okay? That being said, I like dividend stocks. The name of the show is Dividend Investing for Weekly Cash Flow. Hence the name Dividend. So we want to look at stocks that have dividends. And the reason being, there's over 10,300 and somewhat. There's a lot. That's a lot of stocks to look at. Now, about half of those 10,000 stocks pay a dividend. The other half take all the profits and put it back into the company for growth. So you got 2 ways of doing this. One, if you want capital growth, it means your money grows faster, okay? If that's what you're looking for, capital growth, you're definitely in the wrong place. Terribly sorry. I'm 61, I'm retired, so the money that I earn on a weekly basis pays my bills. Okay, I can't rely on the government. I don't have a pension because I had my own business and I didn't set up a pension fund. Silly me. But I'm not old enough to collect Social Security, so that's out of the picture. So whatever money I've accumulated over the years has got to last me for the rest of my days. Unless, of course, I want to lower my... No, I'm not. I shouldn't say it. Unless, of course, I want to go to, good afternoon, welcome to Walmart. How may I help you? Will that be paper or plastic? No, that is not me. Terribly sorry. So here's the thing. I'm looking for companies that are consistently profitable and that have a dividend. The reason why, a dividend is a portion of the company's profits that they give back to the investors, and that is us. When we buy and sell stocks, we become investors. We become part owners of that company. Thus, we are entitled to a portion of the profits. Okay, so that being said, the only stocks I really like to look at are those companies that, number one, are consistently profitable. That would be great. Number two, have dividends. I think that's pretty much it. Profitable companies that have dividends. Okay, now, I like certain stocks. The ones that I like, if you got a pencil and paper, you might want to write this down. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. Denny, how you doing? Ryder McGee. Pandilla, how are you today? Denny, good evening. All right. That being said. All right. So, let's start it off. Okay, we got Alex over here. Alex wants to take a look at Kohl's. I'm Fidenta. Okay, interesting name. All right. So, Alex was first. Let's take a look at Kohl's. Now, I have a system that goes 1, 2, 3, A, B, C. That means everything I do is systematic. Okay, it's 1, it's 2, it's 3, it's 4. One step at a time. It allows me to be in, out, and just done and over with within 10 or 15 minutes. Because after all, I have better things to do than sit in front of the computer. Now, some of you guys are going to ask me about stocks that I particularly don't like. Now, I'm not going to really beat you up about it. That's not what we're here for. We're here to look at ways of making some money. So please, do not ask about a stock that you know is at the high of the year. No desire to see that whatsoever. There's no opportunity for us. Okay, I want opportunity. I want to be able to share something with you guys, say, hey, that makes sense. But here's the thing. I don't give advice. I don't give tips. I just do observations. So if you give me a stock, I'll take a look at it and I'll give you my opinion. And that's all it is. It's just my opinion. Okay? I do suggest you do your own research. Never blindly listen to some bonehead at the other end of the camera. And that would be me. Anyway, I'm just sharing what I do. Now, the reason why I'm doing this, a lot of people ask all the time, why are you doing this? Well, I'm doing this for my children and my grandchildren. Granted, I have one grandchild at the moment, but I have 4 kids. So I'm hopeful that in the future I'll have a lot more because I'm not delusional thinking I'll be around forever. Also, I've had conversations with my 84-year-old, that's terrible, my 84-year-old mother. Okay, she doesn't remember a lot of things. I do not want to be at that point. I would like to share all the information I have through video dialogues. Okay, so my children and grandchildren at some point in the future will say, how did Grandpa handle this? How would I do this? So all these videos are creating for my children and my grandchildren, and you just happen to be here to watch while it's happening. So I'll be more than happy to help any of you out. Give me a good question, give me a good stock, and we'll take a look. But keep in mind, I'm very particular in what I do because I'm looking for simple, safe, predictable, consistent 1% per week. Now, for the past 15 years, I have been getting close to 1% per week, every single week. You don't believe me? Go to my YouTube channel. I get over 1,200 videos. I've been doing this for a very long time. Okay, my very first post was in 2011. So there's a lot of detail. There's a lot of backstory about what I do. Okay, it's there. You just got to go digging for it. That being said, let's get started. I'm going to try to keep the commentary down to a little bit and just see if we can, let's see how many stocks we can come up with tonight. So, Alex, first on the list, let's do this. Kohls. I like Kohls. I actually have some Kohls. KSS. Kohls. Come on down. Here we go. First thing I want to look at every time I take a look at a stock are simple things. Very simple. You ready? Here we go. 5 things I'm looking for. Okay, number 1. The high of the year. Okay, I'm not going to count that. Ooh, holy cow, that's a big one. Nope. Nope, that ain't it. Oh, that's better. All right. Now, my son was over today, and he showed me some really neat tricks that we're going to play with on this thing today. And hopefully it works the way he showed me, because he showed me, and then he disappeared. It's like he's relying on me to remember everything he showed me. So let's see what kind of damage we can do tonight. All right, so I'm looking for 5 things. Number 1 is the high of the year. Got one there, and we got another one right there. Oh. And then we get the bottom of the year right there. So we get the high, we got the low. Where was it? Where is it? In what direction is it going? Hey, that's pretty cool. It actually stays there. That's what I'm looking at. 5 things. The high, the low, where was it? Where is it? In which way is it going? Okay, so how do I get rid of this? Hey, not bad. I'm getting the hang of this thing. All right, so at this moment in time, after I look at all that, I like to stay. Oh, wait a second. I should tell you. I should tell you what I'm looking for. 5 things. Okay, now, this strategy that I'm about to share with you came from when my 9-year-old daughter, okay, well, she was 9 at the time, back in 2008. She's 26 now. Can you believe that? I have a 26-year-old, and she's the youngest. 26, she's the youngest. My oldest is 36. It's like, what the hell? I don't want to feel that old. But it is, anyway. Okay. My 9-year-old daughter back in 2008 said, Daddy, what are you doing? Can you teach me? Imagine that. Can you teach me? A 9-year-old little girl. Can you teach? All right, so I'm supposed to teach a 9-year-old how to invest in the stock market when most adults don't get it. Think about it. Most adults don't get it, but my 9-year-old wants to learn. Okay. Considering she's 9, simple, safe, predictable, consistent, and no way for her to lose. That's the 5 criteria. Okay? 5 criteria. So we came up with 5 rules. They're very simple rules. Really, really, really simple. Number 1, never buy something you do not want to hold on to long term. You just might have to or just might get to. It depends on how you look at it. Number 2, never sell at a loss. It defeats the purpose of the whole game. And yes, it is a game. It's an adult game with adult consequences. You can lose your money. You can make a lot of money. Okay? Okay, rule number 3. This one always boggles my mind because you're going to be surprised how many people are going to ask me about stocks that are not consistently profitable. Rule 3, make sure the company is consistently profitable. Me personally, I like 2 decades. Now, that's not 2 years, that's not 2 weeks, not 2 months. 2 decades is 20 years. Now, you may think 20 years is a little bit unrealistic. No, the stock market's been around for 400 years. If I cannot squeeze a couple of decent stocks that have 20 years of profitability, well, what the hell am I doing? Rule number 4, weekly options only. All right, I have no desire to sit in front of the computer looking at this gobbledygook, okay? No desire whatsoever. Okay? Rule number 5, make sure all the numbers work. Now, we're going to touch on that in a little bit. I'm just going to show you some trades and see if they make sense. Because out of all the questions that you're going to have tonight, three good questions. Number 1, does it make sense? That's the number 1 question I want you to ask yourself. So when you leave tonight, however long you stay, when you leave, you ask yourself, did that make sense? Number 2, do I like this company? Whatever company we're looking at, okay? Just at this moment, it's Kohl's. Okay, and number 3 is like, can I see myself doing this? Because this is not something that's taught everywhere. As a matter of fact, I don't know anybody else that does something like this. Okay, investing for weekly returns, not in, because everybody's always in. Hey, what's your annual percentage rate? What's your annual return? What's your ROI on annual basis? No, I'm doing weekly because I live my life 1 day at a time, not 1 year at a time. That takes a long time to do. 1 year at a time. No. All right. Anyway, so we're gonna take a look at Kohl's first. Yep, Pedialyte. I was sick the other day. I'm just trying to get back to some type of normal. It's been challenging. All right, so after I take a look at the chart, great. Next, I want to take a look at the numbers and do the numbers work. Basically, it's simple. What am I buying it for? What am I selling it for? Am I making my 1% or not? And then I want to take a look at the chart. Is it the right time to buy? Okay, there's a time for every purpose under heaven. Who is that? Is that Simon and Garfunkel or Seals and Croft? I have no idea. There's a time and purpose. Wait a minute, it's time for everything under heaven. A time to... Okay, whatever. Okay, so it's currently at $16.40. So the closest strike price to $16.40 is going to be the $16.50. And that's paying 50 cents a share. Now, if you don't know what 50 cents per share is on a $16 stock, it's over 3%. Well, now, all right, hold on a second. If 1% a week is over 50% per year, well, 3% a week has got to be at least 150% per year. That's more than doubling my money every single year. Well, that works for me. But I'm not greedy. I only want the 1%. So let's see what we can do. Now, so the numbers work, fine. Now I want to take a deeper dive into the chart and see if it makes sense. So that I need my glasses for, because the chart. You know, the funny thing is, I'm standing literally 5 feet from a 60-inch monitor. I mean, this thing's a monster, and I still got to wear the glasses. Don't get old. It's no fun, and everything just doesn't work the way it did in your 20s, 30s, and 40s. Not even in the 50s. When I was in my 50s, I didn't need these damn things to see 5 feet. But now I do. Anyway, that being said, first thing, a year ago, we're at 21.29. We dropped all the way down to $6. Can you imagine that? From 21.29 down here to $6. That's almost a 75% decrease. That's a lot. Okay, so from there, she shoots up. Now we're at 16. So that is more than 100% increase. All right, That works. Like it. All right. So a year ago, the bottom of the end of the week. Okay, so now I want to look at the last 30 days. Now, the reason I want to look at the last 30 days, so 21, 21, 21, right there. Okay, that's the last 30 days. Looking for the exact same thing. Any chart I look at, I'm looking for the 5 things. The high, the low, where was it, where is it, and what's the flow. That's easy to see. Okay, she went down, retraced, down, making the bottom here, then shooting up to right here. Well, does that make sense? I mean, look at it. That's pretty easy to see. I think I might like this thing. All right, so that being said, it's at 1640 now. And if I do the 1650s, I can get 50 cents a share. Think about that. If I buy it where it is now, 1640, I could sell it at 1650 and make over 3 or 4%. Or I could sell the 16s and still make over 3%. It's a safer trade. So what are you into? Safety, doing the 60s, 16, or do you want profitability doing the 1650? It's give and take. You got to pick one. You can't do both. Got to pick one. All right, so let's do this. Alrighty, so the 1650. This is going to be the first one on the list today. Let's see what it looks like, Alex. And Alex is asking, should I roll my Kohl's 1650 call to 17? If so, it expire this Friday or next Friday. Okay, number one, Alex, it's going to depend on what you paid for the stock in the first place. Okay, you're asking me, should you roll your 1650s into 17s next week? Anytime you move from 1650 going up, you actually lose money on that. You'll make more money just rolling the 1650 forward and just keep rolling it forward if you're going to get 1% every week. But it always going to depend on what is your goal? What is it that you're trying to do? So you've been here a lot, like for the past month or so, you've been here every night. What?
A little bit of setting. Well, I was only here for like...
Okay, I got some noise in the background. Ron Mudd, how you doing? I'm going to mute you, so if you have any questions, just unmute yourself, all right? All right. So you've been here for a while, but I still only know a very little bit about you. If you want to have a call, you know how to do it. Drop me your number. I'll give you a call. We'll have a chat and see what you're really looking for. So the question is, should you roll the 1650 into next week, or should you roll it up from 1650 to 17? I say play with the numbers. Find something that you are comfortable with. I can't tell you what to do. I mean, I could tell you what to do, but that would be a disservice because I know absolutely nothing about you. So my suggestion would be, if it was me, I would take a look at all the different possibilities. Okay, the 1650, I would push that forward and see what the market maker is offering. Okay, and then change it from 1650 to 17, push it forward, and then see what the market maker is offering. And then decide, well, which one makes more sense to me? Because in the long run, it's always going to be what makes sense to you, because we're all on our own individual journeys. My journey is different than everyone else, but see, you know what I'm looking for. Simple, safe, predictable, consistent 1% per week. I'm looking for cash flow in preservation of my capital. Say, I don't want to lose any money, but I want to have cash flow coming in consistently. So that's my goal, all right? So I don't know what your goal is, Alex, so I really can't tell you what to do, but let's continue taking a look at this. So if the top is here 30 days ago, she drops back up, back down, see? Drops back up, back down, then she shoots up to here. Now, can it keep going higher? Because the high is right there, okay? Which is right there. So can it go up there? Yeah, it can, but is it going to? And what about the time frame in which you're asking? Yes, I'm kind of liking it. So the 1650s, let's do the 1650s and see what it looks like. Okay, first thing I want to do is I want to change it to covered call. Now, if you don't know anything about a covered call, there are literally hundreds of videos explaining exactly how you do it. But to make a long story short, you buy a stock, you own it. You can do anything you want with it. A covered call is when you own a stock and then you sell it to someone else using a call option. Now, a call option, all it is a fancy name for an insurance policy. That's all it is, an insurance policy. 4 things got to happen. You need a beginning date, which would be tomorrow. If I decide to buy this tomorrow, it would start tomorrow. An ending date, that would decide which one of these I choose. 24 October, that's this Friday. 31 October, that's next Friday. 3 Fridays away, 4 Fridays away, 5 Fridays away, so on, so on, so on, and so on. Okay, so if I'm going to do this Friday, fine, let's pick it. And then we'll see how the numbers work. Now, considering tomorrow is Wednesday, I usually don't do this week's on a Wednesday because there's only 3 days left. And it's very challenging to get 1% with only 3 days left. Okay, so I like to do all my trading on Monday because on Monday I have 5 days. Monday, Tuesday, Wednesday, Thursday, Friday. Now, why is this thing not charging properly? All right, let's get rid of that one. Let's plug this one over to here. All right, okay. All right, let's do this. So, a covered call. We're going to do the 1650s and see how it pans out. 1650 right there. Now, I want to do just one contract so you guys understand what one looks like. Then you can decide how many can you do. Okay, I might be able to do 115 and you might be able to do 621 or 5. We're all different. We all have a different plan. We all have a different goal and we all have a different starting point. And we all have a different risk factor. All right, so here's the order right here. Buy 1 covered call Kohls, 24 October 25, the 1650 call option against the stock at the market to open. To open, here's the profit, here's the investment. What does that mean? Well, let's find out. Now, remember when I said safe, simple, predictable? Well, it tells me exactly what my profit's going to be before I even do it. And it also tells me what my investment is. See, maximum profit, cost of trade, including commissions and fees, they're already there. I know exactly what I'm going to make, or pretty much close to exactly what I'm going to make before I even do it. But what it doesn't tell me is the rate of return. Now remember, I'm doing a rate of return on a weekly basis. So let's get the calculator out and figure that out. So I get my calculator. First thing I want to do is put in the profit. Profit, 66 bucks. And I want to divide that by the cost of the trade, including commissions and fees, and that's $15.84. So let's divide that up and see what it comes to. $15.84. Okay, now that is lovely. Think about this. 4.1%. Think about it, 4.1%. Why the hell not? Think about that. All right, so let me see if I can do this right. All right, let's get this right here. Now, my son was teaching me this. Let me see if I get it right. All right. Here we go. Lovely. Now, let's see if that worked. Okay. There it is, right there. Nice. It does work. There it is. Buy 1 covered call of Kohls, 24 October 25 to 1650 at the market. $66 is the profit, $1,500 is the investment, and that's 4%. I like that. But watch this. Okay, let's go make it smaller, and we're going to put it right there. Okay, And we're going to come back to it later. Yeah, it worked. Alrighty. So that being said, let's get out of here. Let's get out of there. Let's get out of there. Let's go back to here. So, Alex, I'm not 100% sure what you bought your Kohls at, but playing with the numbers, the 1650, pushing it forward 1 week, and then trying to change it from 16 to 17. I got to turn the fan up a little bit. It's getting a little warm in here. So that's the first one on the list. Great. All right, next one on the list. I'm Fidenta. Wants to take a look at Humana. So let's take a look at Humana. And that is H-U-M, Humana. Ooh, now this one's going to be a little on the tougher side. Reason being, let's take a quick gander. 5 things, first thing I'm looking for. The high, the low, where was it, where is it, and what is the direction? Up, down, up, down, up, down, up. Okay, so it's in an upward trend right here. And the current price is $295.20. The 295s are going for $450. Well, that all looks pretty darn good, right? All the numbers do. But just because the numbers look good, I want to zoom into the chart and see, is it the right time? Here we go. I'm getting the hang of this. All right, so let's check out the chart. Need the glasses for that. I think maybe I need an 80-inch TV, an 80-inch screen. Or maybe the big 100-inch screen. And then I won't need the damn glasses. I don't know. We'll see. All righty. That being said, a year ago we're at 267. The high of the year seems to be some resistance because look, we hit here 313 and we hit 313 again there. Okay, that could be called resistance. I don't know. And then we get the bottom way down here in the end and toward the middle of July. Okay. Well, let's look at the last 30 days. Let's get rid of this. All right. The last 30 days. Oh, wait a minute. The high. Yeah, we already did the high of the year. Last 30 days. Here we go. Now, I'm not 100% sure how you feel about this, but take a look. The high is here. The low is here. Here's where it was. Here's where it is. Look at this. Down, up, down. Now she's going up. But here's the thing. The top is right there. How much more space does it got? It's only got like, what, $10 to go? No, $10 on a $295 stock. That's 4%. Can it do that? Yeah, it can. But is it going to? And how safe do you feel doing that? All right, well, let's take a gander at it. Let's get rid of this. And let's do the 295s. The 295s, just one contract. Here we go. All right, so buy one covered call Humana. 24 October, the 295 call, the max profit, $455. That's a lot, $455. But look at what the investment is, $29,000. Ooh. Okay, so let's do the math. Now remember, this is only for 3 days, Wednesday, Thursday, Friday. Okay, if it doesn't work out, we can always look at next week's numbers and see what they look like. All right, 455 divide $29,045, grand total of 1.5%. 1.5 if you like Humana. Okay, well, you know what? Let's add this. Oh, shit. All right. Whoops. All right. Humana. Here we go. And here we go. Yeah. I like it. Now, more than likely, it is going to be, come on, right there. Here we go. There it is. Check it out. Now, see, you guys were saying that we couldn't see this. Well, check it out. Now you can see it. Look at the size of that thing. By one whoops. Oops. All righty. All right. By one Humana, 24 October, which is this coming Friday, the $2.95 call option, $4.55 is the profit, $29,000 is the investment, and it's 1.5% rate of return for 1 week. Okay, hold up. So let's, how do we get rid of that? Ha ha ha. Well, that's interesting. Okay. Oh, here we go. No, that ain't it. How do I get rid of those little squigglies? Oh, well, I don't know how to do that one. All right, so we're going to take this one, okay, and we're going to put it up over here with that one. All right, so now we got two to look at later. There we go. Nice. Now, there it is. Oh, I like that new toy. All right, so let's get out of that. Delete. Single and back to there. All right, so that's the first two on the list. And yeah, they worked out very nicely. So let's see what else you guys have in store. All right, so let's get some questions down. It was the birds. Oh, it was the birds that sing the turn, turn, there's their season, turn, turn, turn. Yeah, I got it. Thank you very much, Joe. All right, so let's see what we got. Thank you there, Victoria. Very nice of you. Don't. All right, what do we want? All right, let's get this out of the way. Let's get a chair. All right, I'm a Finta. Okay, Zach wants to take a look at VXXS. Now, Zach, I'm going to slide you a little bit of slack only because, number one, I've never seen you here before, so you're relatively new. I feel like I'm going to regret this VXXS. VXXS. Okay, Zach, as you can plainly see, that stock doesn't exist in the U.S. stock market. Can't help you out there, kiddo. So what else do we have? Alex, how you doing? I'm a sure man. Wants to take a look at Alcoa AA. I love Alcoa. I do. All right, that being said, take a look. Got the high of the year way over there. Here's the bottom. Now she's shooting up nicely. What's going on here? Uh-oh. I need that. What's going on here? Let's zoom in and find out. Okay. So the last 30 days, what do you think? I'm a sure man. 30-day bottom is here. She shoots up, pulls back, shoots up. Here's the high right there. Why are we looking at the high? Don't get me wrong. I love Alcoa, I do. But is it the right time to buy right there? I don't know. Doesn't look like it to me. But if you like it, more power to you. You know what I mean? All right, next on the list. Money Matt Picks. Poet. Is that even a stock? Poet? Poet Technologies. Interesting. Okay. What's going on here? I'm not 100% sure on this one. Matt. Oh, Money Man Matt. All right. Here's your bottom. Shoots up, pulls back. Now she's going up again. All right, right there. 745. What's the 750 going for? The 750 is going for 35 cents. That's over 4%. Well, I've never heard of the company, so I have no idea what they do. Okay? Now, do you like this? That's an interesting question. Because, like I said, I have no idea who they are, and I have no idea are they consistently profitable. Lisa, hey James, can you look at Oracle? I sold the 297.50 strikes, and the stock dropped, and now it's at 275. Oh, Lisa, sit tight. We'll take a look at that in a very short moment. All right, Joe, is it true that stock trading can turn you get? I have no idea what the heck that means. Buying silver now is like buying Bitcoin 2010. Okay, Emmett, I'm going to have to disagree with you. The only reason I say gold and silver, because gold and silver are great storage spaces for wealth. It doesn't give you cash flow. But you're not gaining any cash flow from it. And there's nothing wrong with it. It's just, I don't have the ability to do that. So I put all my money in gold and silver. Great. My children will love to inherit all that. But what the heck am I going to do? Going to go back to work? No, I have no desire to go back to work. See, my money is working for me every single week, which means that money, allows me to live comfortably and to live the lifestyle that I have. And if I started buying gold or silver, well, then I might have to go back to work, and I really don't want to do that. But, hey, if it works for you, good. But money don't hate, but you don't hate money. No, I don't hate money. Why would you even think that? All right, anyway. So Poet, I have no idea who they are, no idea what they do. So I don't know what to say about that one. Just got here. What chart is that? Damek. That is Poet. Poet, P-O-E-T. I know I have no idea who they are. All right, so Lisa wants to take a look at Oracle. So let's take a look at Oracle for Lisa. O-R-C-L. Oracle. Now, Lisa, I feel a little bad about this because I know we talked about this a couple of weeks ago. Anytime I see a gap, ooh, holy cow, I gotta erase that. Okay. Now, Lisa, I'm not going to pick on you too much because you're relatively new, but I did mention this a while ago. Anytime I see a gap up like this, and look at the volume, these little blue lines down here, the volume was just huge, and it just jumped up, and it made a high of the year. Well, a gap up like this usually has a tendency to be followed by a big pullback. Because when you're going from 220 and you jump up to 340, that's over $120 increase. That's a 50% increase in less than a couple of weeks. So yeah, there's going to be profit taking. Well, here it is right here. So I'm not quite sure why you bought here. See, I stay away from this. Well, let me go back up for a second. Okay, let me zoom in. Okay, so we're here about 240. All right, and she gaps up from 240 to 350. 240 to 350. That's a 50% increase in one day. 50% increase in one day. So now it's profit taking. It's taking a little bit longer, but yeah, that's what it is. So to get out of this mess, Miss Lisa, you have a couple of choices. What? Come on. There we go. You got a couple of choices. You said you jumped in at 295, which would be right about here. Now we're at 275. Okay, the only way to get out of this mess is to do some dollar cost averaging, and you better hope that this gap, see this gap between here and here, it's starting to fill, and it will continue to drop until it fills right down to there. Usually, okay, gaps have a tendency to fill, which means if she gaps up, eventually she's going to drop back down again, back to this level. Usually. It's not guaranteed. There's only 3 guarantees in life, and this ain't one of them. Okay, so a few choices you have. Number 1, dollar cost averaging. So if you buy here, your dollar cost average from 295 to 275 is probably going to be 285. It's going to drop you down a little bit. The more you can buy the dollar cost average down makes it easier to sell. Okay, it might be a challenge if this thing continues to drop to fill the gap. Hope that helps, Lisa. You're welcome. All righty. All right, what do we have next? Merv Atkins, how are you today? Hercules wants to take a look at some Ford. All right, Hercules, we'll check that out. All right, Ford. Now, I like Ford. Company's over 100 years old, been around. It's an American icon. It is, it is. Argue all you want. Like it, love it, is what it is. All right, so the 5 things I'm looking for. The high, the low, where was it? Where is it? She drops, shoots up, comes back down. And now look at this, back up again. How much higher can it go before it challenges that 30-day high? Well, let's go and let's take a look at the last 30 days. There we go. Last 30 days. Now, just to let you know, I saw these numbers the other day. I took a look at Ford. I said, oh, yeah, I'm jumping in. And I did. I bought a bunch on Monday because I like to do all my buying on Monday. The reason I do my buying on Monday, because on Monday I get 5 days of time value. Now, if you don't know what time value is, it's something kind of like this. As the sands flow through the hourglass, so do the days of our lives. Basically, as the days go by, the option value decreases. So you have the expiration date. And as we were talking, the expiration date, October 24th, that's this Friday. 31 October, that's next Friday. 7 November, that's 3 Fridays, 4 Fridays, 5 Fridays, so on and so forth. So as the days pass, the value, or I should say the time value of each option slowly decreases. So on Monday I have 5 days of time value, which is 20, 40, 60, 80, 100% of time value for the 1 week. 1 week, by Monday getting out on Friday, that's 5 days. So Monday's already gone, just lost 20% of time value. Today is gone, it's Tuesday. Now we only have 3 days left. That's only 60% of the time value for this week. Because whether you like it or not, whether you agree or not, Friday is coming. It's 3 days away. And guess what? It's 65 days until Christmas. My father-in-law used to do it all the time. Because my son, which was his first grandson, he spoiled him rotten. And he would call and taunt us. 35 days to Christmas. 33 days to Christmas. 12 days to Christmas. Every single chance he had. So you know what I do nowadays? I call my ex-wife. I said, hey, 65 days to Christmas. I hang up on her and laugh my ass off. Anyway, that's what her father used to do. Keep that family tradition alive. Okay, so can it keep going up? Yes, it can. Okay, can it go and challenge the 30-day high right there? That's a 30-day high. Can it keep going? Well, we're right here now. Now, this is not a position I jump into tomorrow because there's not much more space left. Well, I jumped into it last week. Last week, she's down around here. Okay, last week she went up, and this week I still have it. So more than likely, I won't have it next week. Because once she jumps up to a certain point, there's just no more money left. But we will take a quick look at it, Hercules, just to see what the numbers look like in case you're an adventurous soul and you got 3 days left and you think that you can get in and out in 3 days and get that 1%. Well, let's take a look. It's at 1256. So let's do the 1250s on Ford. Okay, covered call, the 1250s. I heard something over there. Hello, hello. All right. All right, so here's the order. Okay, buy one covered call of Ford, 24 October, that's this coming Friday. The 1250 call option, at the market to open. Well, the profit's $37.50. The investment's only $1,200. It's only 3 days. Okay, now a lot of people think that they get that they might lose money. A lot of people think they're going to lose money in the stock market. Well, I'm going to enlighten you a little bit. All right, if you buy a stock, you make the conscious decision to buy something. So let's say I buy this tomorrow morning at $12.56. Okay, there is no time I will ever lose money if I never sell for less than what I paid. So if I pay $12.56, there's no way on God's green earth am I going to sell it for less than $12.50. Did you hear that? If I buy it for $12.56, I'm not going to sell it less for $12.50 because the $12.50 is the closest strike price. And the closest strike price is going to be the greatest rate of return. Okay, so if it drops down to 10, I'm not selling it. Did I lose money? No. You never lose money unless you agree consciously to sell it for less than what you paid for it. So remember rule number 2, never sell it for less than you paid. Rule number 1, never buy it unless you plan on keeping it for the rest of your life. Okay, so if you plan on keeping it and it gives you a nice dividend that increases every year, that means every 90 days you will collect a dividend. Well, this is just another opportunity to collect a little bit more than that dividend. And you actually got to like the stock. Rule 1, never buy something you don't want to own for the rest of your life. So if you like Ford, great. Well, right now it's at $12.56. And no, it's not a tip. No, it's not advice. It's an observation. Somebody wanted to take a look at it, Hercules. Hercules wanted to take a look at Ford, so we're looking at it. That's all we're doing, looking at it, and I'm observing it, and I'm pointing out numbers. That's all I'm doing. Okay, I'm singing, I'm dancing, I'm entertaining, blah, 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 all that kind of nice, neat stuff. So, does it make sense? Well, before we even answer that question, let's get out the calculator and see what type of rate of return that is. Now, remember, personally, I'm looking for 1% a week. I think this is more than 1%. Well, I already own it, so, it is what it is. But this is for Hercules. Okay, so the maximum profit, $37.50. And we're going to divide that by the investment. Now, just one contract is $1,200. So can you afford to, look at that. Pengay, thank you. See, can you afford to do 5, 15, 72, 130? However much because we're all on a different path. We all have a different journey. We all have a different amount of money that we're going to play with. Okay, the amount of money I play with is probably going to be different than what you played with. Now, I started over 30 years ago, which is $12,000. I took a second mortgage on my house, and man, was my wife pissed. She was. Okay? Anyway. All right, so the profit is $37.50. What is the cost of one contract? Divided by 12, 13, gives me a grand total of 3%. Now, add that up in your head. Okay, 1% a week is 50% per year. 2% a week is 100% per year. That's doubling your money. Well, 3% per week, that's over 150% per year. Now, can you get 3% every week? Good luck. I don't even get 3% every week. Now, I do get 3, 4, 5% once in a while, like maybe once or twice a month. I'll get a nice number like that. I think the best I've ever done was like 12%, I think. Or was it 18? I don't know. For 1 week. That's crazy. But I only do stocks that are consistently profitable, number 1. Number 2, only stocks I would not mind owning for the long term. Now, granted, the longest I've ever held on to anything is 14 months. Now, I didn't do it on purpose. Well, I kind of did because Kohl's, that's what it was. It was Kohl's. Kohl's gave me 1, 2, 3% every single week for over 14 months. As a matter of fact, I just jumped into it again just recently. It works for me. If it's going to give me 1% every week, I'll hold on to it. That's a 50% return. When's the last time you got 50% return? Now remember, the trading strategy I'm teaching you was created for my 9-year-old. And as a matter of fact, we haven't showed you the 9-year-old in quite a while. So before we go, we're going to save this one, put it on our whiteboard so we can show you later, just before I leave. All right, so 3%, love it. I got to write that one down. Wait a minute, it's already written down. Yeah, it's already written down. All right, that being said. Okay, so let's save this one. There it is. Yeah, I'm getting the hang of this. And there we go. Yeah. All right, so, okay, good, that works. Slide this up. Slide, come on, slide it up. There it is, right there. There it is right there. Uh-oh. What is that? That's not what I want to save. What's all those squigglies there? Let's get rid of those. Oh, wait a second. Wait. Nah, I don't want to do that. Let's go back. All right, right there. Let's close this. Go like that. Get rid of it. Done. All right, so go back to here. There's no squiggly lines on this one. Okay. All right, so come on. There it is. Nope, that ain't it. Oh, there it is. All right, so go up, right there, right there, right there. All right, that works. Cool. Now, let's do this right like that. All right, like, come on, like this. Go like that. What does it look like now? There it is. Yeah, I'm getting like this. All right, there it is. Forward, buy one covered call, blah, 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 blah. There it is right there. All right, so let's make it small. Put it right over there with those. Nice. Let's go back to here. Lovely. That worked. I'm liking this board. This is neat. All right, so let's get out of this. And let's find something else. All right, that being said. All right, let's grab my chair again and let's see if we can answer some more questions. Chris, I have no idea why he's laughing at you, Chris. Really don't. All right, so what do we have? Lemonade. All right. Whoa. Thoughts, PFE. Ooh, Pfizer. Jonathan wants to take a look at Pfizer. Now, don't get me wrong, Jonathan. I like Pfizer. I do. Let's see what the numbers look like. PFE, Pfizer. Woo, ooh, nice. Do you see that, Jonathan? Check a look at that. Pfizer, a year ago, we're at 29. We bottomed out at 20. Okay, shot back up. Look at the last 30 days. Last 30 days. Check this out. Here's your bottom, shoots up, drops. Look at this, 3 days to the upside. I love that. As a matter of fact, let's take a gander at it. We're at 24.85. The 25's going, nope. Did you see how quick that went? Nope. Reason being, for this week anyway. This week. Okay. Currently, we're at 24.85. The closest strike price to 24.85 is going to be the 25s. And that is only paying 14 cents a share. That's just a tiny bit above 0.5%. Now, 0.5% every week is still 25, 26% per year. Well, that's not that bad if you think about it. When was the last time you got 26% a year? But here's the thing. There's over 300 companies that I personally like. So I probably wouldn't be doing this one this week. Let's take a look at the numbers for next week. Okay, so let's get out of that. And let's go 31 October. So 31 October, the 25s are going for 32. That's 1.5%, or a little over 1.5%. So that kind of makes sense. If, of course, I like Pfizer. And look at this. I look for a 30-day high, 30-day, well, it's not really a 30-day bottom, but it is the bottom. Okay? She shoots up from 23 to 27. So 23 to 27, what is that, 14% maybe? 14, 15% jump right there. And then she drops. Now we get 3 days to the upside. 1, 2, 3. I love 3 days to the upside, especially on the bottom right there. Well, that works for me. Okay. And if I do next week's, that's 1.5%. So let's check it out. Pfizer. I got a sneaky suspicion that, considering I know how to use this thing now, we're going to look at a lot more stocks, but I'm not going to be able to answer all the questions. So we're going to have to come up with some kind of a balance here because we are broadcasting on 9 different channels, which means that there's a lot of questions to answer. All right, Jonathan, let's check this out. All right, so let's get rid of this. Let's do this here, covered stock for the 25s for next week. 1 contract. Mark it in. Here we go. Buy 1 covered call of Pfizer. Is that right? We're on Pfizer? Yeah, Pfizer. 31 October 25. That's next Friday. So whoever buys this option has between tomorrow morning, when I sell the option, and next Friday, okay, in order to do whatever they want to do when they buy the option. See, I'm not an option buyer. I'm an option seller. And the reason being, okay, people ask me this all the time. Well, you buy options? No, I do not buy options. I sell options. And the reason why I sell options because 80% of all options expire worthless. So why would I want to buy if my chances of winning are only 20%? So I'd prefer to be a seller because it's simple, it's safe, it's predictable, and it's consistent. That's my goal for me. Now, as soon as I finish up with this one, we are going to give you a little treat. Okay, so profit, $50. Not a whole heck of a lot. Investment, $2,450. That gives me a grand total of 2%. Now, is it worth it for you to jump in to Pfizer to get 2% between now and next week? But here's the thing. The stock has to be above 25 by next Friday. Well, it's at 24.85 now. So what happens if the stock goes down? Well, if the stock goes down, I still get to keep my profit for each contract that I sell. And then I get to keep the stock. And next week, I get to sell it again. If the stock drops, well, I'm just going to drop my strike price. Low enough where I'm not at risk of losing, but high enough so I can get enough profits. Because that's what I'm looking for. So a lot of you, oh, check that out. Yay. Okay. Mr. Unemployed. Oh, back again. Thank you. All right. So for those you who have not met the little princess, let's go and say hi. Wait a second. Do we want to save it? Yeah, let's save this one too. All right. We're going to save this one too. Why not? Gotta love it. Nice. Okay. Let's see where she is. Where'd she go? No, there it is, right there. Nice. Oh, whoops. There it is. By Pfizer. $50, 2,500. That is a, what percentage was that one? I forget. 2%. Okay. Now, 1% a week is 50% a year. 2% is 100% a year. Think about it. When's the last time you doubled your money every year? Interesting question. All right. So I'm going to make this smaller. Oops. No. Smaller. And I'm going to put it over here. And that's 4. We got 4. Yeah. 4 halfway decent ones. Okay. Let's see what's next. Now, is the little picture board your new method for keeping the ones you like? Foo-foo, do you like that? I bought this thing a couple of months ago, and the only thing I knew how to do that was this. That's it. That's the only thing I knew. So my son came up, and he showed me how to use this thing. Cool. Okay, now, for those of you who are on the morning trading group, okay, you're worried about that echo in the background. Well, we dove into that too. That's noise bouncing all over the room. So what we're needing to do is we need to soundproof the room. And that will take care of the echo. Anyway, so, gee, oh, wow. What program are you using? Garrett, this is not a program. This is a trading platform. Okay, just like E-Trade, Charles Schwab owns this. It's called Think or Swim. It's not a program. Okay, it's a trading platform. You got Robinhood, Acorn, Webull, International Brokers, E-Trade, Charles Schwab, a whole bunch of different brokers, a whole bunch of different trading platforms. That's all this is. Okay, Charles Schwab owns it nowadays. All right, so let me introduce you to the little princess. She hates that, by the way. Just in case you're wondering. She does. She hates it. Don't call me that. I'm not a princess. That's what she says all the time. Okay, so this is the website, The10MinuteTrader. Remember I said, James, from the 10 minute, wait a minute, Dividend Stock Talk brought to you by The10MinuteTrader. Okay, we're going to go to YouTube. That's all my, what do you call that? Social media. That's not even all of it. That's just some of it. All right, here we go. We're going to go to YouTube. Okay, and there it is right there. You check that out right there. 1,200 videos. That's a lot of videos. All right, so let's go videos. Let's go to the oldest ones. Okay, because remember, this was 15 years ago, or maybe longer.
As you being part of my internet lifestyle company, which my dad is what he called that. That's what I do. Being part of that, you're going to be getting weekly.
Whoops, let me get out of the way.
Stocks that I'll be trading, and every month you'll be getting 4 lists of stocks.
All right, that's the princess. Here's my favorite part right here. Right there. That's me. A long time ago.
What does that mean? That means every single day you can buy a different stock.
Here's my favorite part. You ready? Here it comes. Here it comes. All right, so the thing was, how do you keep a 9-year-old entertained? It had to be fun, it had to be exciting, and it had to be something new and different each and every time. So if you go back and look at the really old videos that we did, 2011, 2012, 2013, okay, you see us doing some weird stuff. Why? Because it had to be fun and exciting for a 9-year-old. Remember, she was only 9, okay? And she wasn't a Mensa student, for those of you asking. All right, so let's get out of here. All right, we don't need to look at that anymore. Let's go back to, where were we? Right there. All right, let's get out of there. Let's get out of there. Get out of there. And back to where we started again. Okay, Joel, I'm going to show you something really quick on AGNC. And don't get me wrong, I used to do AGNC years ago. I just don't anymore. And here's the reason why, Joel. Okay, it's got nothing to do with the chart. Let's get rid of that. Okay, it's got nothing to do with the chart whatsoever. Nothing. What it has to do with is right here. Okay, now I'm doing this for cash flow. I could care less about the stock chart. Really could care less. My only concern with the stock chart is it the right time? Because all stocks do is they go up, they go down, they go up, they go down. So as the stock is coming down, it finds the bottom, turns around, and goes back up again. That's where I want to jump in as she's going back up. But AGNC, take a look at this. Okay, 1 cent. One strike out of the money, 1 cent. So if I'm wrong and I try to roll into next week, what am I getting? 1 penny. Okay? 2 strikes, 0, 0, 0. The numbers here are atrocious. I don't trade it. There's a few stocks. Energy Transfer, AGNC, I just don't do anymore because of these numbers here. Has nothing to do with the company whatsoever. It may be a great company. You may love it. Wonderful. Yay. All that kind of stuff. But if I'm not getting paid, I have no desire to buy it. Sorry. It is what it is. Numbers don't lie. Okay, so next, Garrett wants to take a look at QYLD. Now, see, Garrett, I have a minor problem with QYLD. For that, we're going to go over to here. And we're going to put QYLD. Before I go any further, this here is Yahoo Finance. It is a financial website that allows me to take a look at details that aren't available on the trading platform, such as historical data. Okay? Historical data right there. Now, historical data is going to tell me how often has this company consistently increased its profits. Because remember, I'm only looking for companies that are consistently profitable year after year after year. And if it's not consistently profitable for at least 2 decades, I really don't want to do it, me personally. Now, if you like it, hey, more power to you. What are we looking at? QYLD. QYLD. Okay, so who asked for this one? Garrett. Garrett asked for QYLD. You ready, Garrett? Here we go. Oh, check it out. Global NASDAQ 100 covered call ETF. Nice. Sounds like it should be good. So, when you get here, see this right here? Historical prices and then the dates. Well, I want to look at the dividends. So, I'm going to go right there, click on that right there, and I want to do dividends only. See, dividends only. Here they are right there. Now, I want to look at all the dividends. So I'm going to go over to here, okay? And I want to look at the maximum amount of dividends that they have. That means the very first dividend ever paid out by QYLD. All right, maximum. All righty, here we go. 2023, 2021, 2020, 2019, 2018, 17, 16, 15, 14. Hold on a second. That's 11 years. Garrett, that's only 11 years. I want 2 decades. That's 20 years. All right, well, let's give you a little bit of leeway. All right, so let's see how often this has increased. You ready? The very first dividend, 25. The second dividend, 19. Hold on a second, Garrett. Consistent profitability should be higher this year than last year, not lower. Okay, so that's not bad, 25. 19, that's going backwards. 19, backwards. 26, 24, backwards. 21, backwards. 20, backwards. 22, 19, backwards. Do you see the thing here, Garrett? Starts at 25. Backwards, backwards, forwards. Backwards, 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 forwards. Backwards. Garrett, this is not consistently profitable. Why the hell do you like it? Hold on. We got a lot more to go. Let's get rid of those. Okay, and 2014. Okay, September 2014. Okay, here we go. You ready? 20. 22, higher. 19, lower. Higher, lower, higher, lower, lower, higher, lower, higher, higher, higher. Okay. 5 lower and 6, 7 higher. And that only brings us up to 2015. We still got another 10 years to go. And this thing's like a 50-50. Half the time it goes down, half the time it goes up. So Garrett, I'm not going to waste my time on this thing anymore. Because when I say consistency of profitability, hold on, this is what I want to show you. Okay, let's put in one we all know and love, Microsoft. Give it a second, it's going to pop up. All right, you ready? Here's Microsoft Corporation, all the way down to the beginning. Okay, I want to take a look at more than that. Okay, maximum right there. So I want to go all the way back to 2005, all right? So 2005, right here, the very first dividend is 8. 2006, it's 9, that's higher. 2007, it's 10, that's higher. Oops, let's get rid of those. Okay. 2008, whoops, here we go. 2007, 10, higher, 11, higher, 13, higher, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. Did you notice, Garrett? Every single year, the dividend got higher and higher and higher and higher for 2 decades. There's a whole bunch of companies that do this exact same thing. So why would I do QYLD if half the time it goes down and half the time it goes up? I'm strictly for companies that are consistently profitable and have 2 decades of profits. QYLD is not one. Saxo wants to take a look at, what the heck is that? ATD? What the heck is that? I have no idea. All right. Let's get comfy. All right, let's get out of here. And Saxo Evo wants to take a look at ATD. As no options, Garrett, Saxo, no options? No, thank you. All right. Can't even find it on the chart. Garrett just bought some Home Depot. The chart looks good, and the rate cut may help raise the price. Oh, Garrett, you're new. Okay, not a problem. PPM. What the heck is PPM? Paper money. Pepper money. Pepper money? What the heck is pepper money? No idea. All right, Garrett, Home Depot. Interesting. Looks like she's running out of steam, Garrett. Okay, 30-day high. She drops down to here. Now she's just, looks like she's going to go back down again. Doesn't look really that great. Sorry. What else do we have? HH wants to take a look at PPM. What the heck is PPM? Investment Grade Municipal Income Fund. No options. No thank you. Okay, sorry. Poet. Optoelectric Solutions for Data Communications and Integration, AI and Hyperscale Data Center. That definitely sounds like it doesn't have 20 years of increased profits. Does it? Goods dividend stocks under 50 bucks. Keisha, how are you doing? How much do you invest per trade, and what's the profit of what you invested? It's Benji. Okay, it's Benji. My average is, let's say, 15%. Okay, so 15, 15, 15, 15, get 6 different positions. Okay, 6 positions at 15%. Stupid tag. Think about it. Each position I have. If I had 5 positions, it's 20, 20, 20, 20. That's 100%. If I have 4 positions, it's 25, 25, 25. But if I'm doing 6 positions, it's 15, 15, 15, 15. Okay? And what's my rate of return? About 1.4% per week. Keisha, good dividend stocks under 50 bucks. There's a whole bunch of them. Literally, there are. Okay, so let's keep on keeping on. Here's Alex. JFM, thank you for that. Paul, how you doing? Ching Chang, how you doing? Old dog, TikTok show is frozen. Oh no, TikTok show is frozen. All right. Nicole, how you doing? Alex, okay, should I roll? Okay, Alex, you already asked me that question. Mint, is it too late to get into Beyond? BYND, is that fake meat stuff? BYND. Now, I told you I'll take a look at anything you put up, so I'll take a look at it. Okay, so let me see this right here. Okay? 1 gap down, 2 gap downs, 1 gap up, 2 gap ups, and she goes from 50 cents to 3.75. So let me ask you a question. If this thing's at 50 cents, can this thing possibly have 20 years of increased profits? Think about it. Who came up with that one? Mint. Now, don't get me wrong, Mint. I'm all for new technology. I really am. But I have no desire to jump into a company that's not 20 years old. Miss Elliott, can you please tell me how to find your YouTube? My dad doesn't have TikTok. He is interested. Oh, Miss Elliott. Here's a funny thing, Miss Elliott. Okay? See, you're on TikTok now, okay? If you go up to the top left corner of your screen, there's a little tiny picture there of, well, actually, there's nothing there. But it does say The 10MinuteTrader. If you click on that, that will bring you to my website. And on the website, I got to fix that. There is the link to The 10MinuteTrader. Oh, wait a second. I just thought of something. Where is it? I got to find out where the heck that is. All right, I'll have it for you next time. I got a hyperlink. Actually, it's one of those QR codes. Take you right there. Ooh, I like that idea. Thank you for that, Miss Elliott. I'll remember that. You were backwards on TikTok. Am I backwards on TikTok? Oh, yes, I am. Wait a minute. Yes, it is backwards on TikTok. Holy cow. All right, hold on. There we go. And there, that's better. Khalid Saha. Yeah, I do. Khalid, don't do that. Holy cow. It's a lot there. Alrighty. All right. Wow, we got a lot of interesting questions here. All right, so Miss Elliott, the10MinuteTrader.com. You just go right up to the top left corner. You have a little link there that takes you to where I am. Fufu, how are you? Lemonade, TikTok is on the left today. All right, got that one. Feels weird. Yeah, I see that. All right. What's your take on Adobe? Adobe, isn't it ADB, ADBE? Is that right? ADBE? I don't know, is it? ADB. Yeah, I was right. Adobe. Ooh, did you see that right there? Check that out right there. That's the bottom of the year. This baby's bouncing. Who came up with that one? Ruben, let's take a look at this one. Gotta get out of my chair for this one. Okay. Ooh, and the numbers. Holy cow. Nice. Okay. All right, Ruben, you ready for this? I'm looking for 5 things as always. 5, 5, 5, 5. Here we go. The high of the year. The low of the year. Where was it? Where is it? Where is it going? Down, up, down. Okay, it's easy to see. But here, it's turning around and going up. So let's zoom into the last 30 days to give you a good idea of what this thing looks like it should do next. Okay, so you get the high of the year at 560. And then dropped, and the bottom was just a couple of days ago. So the last 30 days, right there. Here's your last 30 days. Okay, your 30-day high, your 30-day bottom. Where was it? Where is it? And look at the motion. Down, up. You got 370 here, and you have from here you got all that room right there to move. Can it do it? Yeah, it can. But that question, right, gnawing at your brain, do I like this company? Am I willing to put my hard-earned money into this company and just hold on to it? And do a covered call every week, get that little cash flow rolling in and collect the dividends. Well, I like all that. That all sounds good. Let's see what it looks like. Okay, it's currently at 357.55. 357. So the 357.50 is right there, and it's paying 455. That's well over 1%, if of course you like Adobe. All right, so let's find out. All right, let's get rid of this. Let's do that covered call thingy right there, and the 357. There we go, right there. One contract. Right, whoops, too far. Right there, and here's Johnny. Let's do this. You ready? Buy one, covered call Adobe, 24 October. The 357.50 call options against the stock at the market, blah, blah, blah. 525 is the profit, but look at the investment, 35 G's. Now, some of you that just starting out that might be a little bit out of your price range, don't panic, okay? There are a lot of companies that are below $100, below $50, below $20. There's a lot of them. It just so happens that he's asking about this one. So let's take a gander. But when you do get to this point, when you're in your 60s and you're getting ready to retire, that shouldn't scare you. Okay, so let's keep on going. So that being said, let's get rid of the squigglies. All right. And let's do some math with the calculator. Calculator. Here we go. Profit 525. Oops. 25. And the investment, okay, remember that. Max profit 525. Cost of trade, including commissions and fees, 35 G's. Okay, well, let's find out. 525 is the profit. We divide it by 35 G's and 222. All right, anyway, 1.5%. Does that make sense to you? And that's only for 3 days. Remember that, just for 3 days. Now, can this thing stay where it is or go higher within the next 3 days? Because this option that we're looking at expires the 24th, which is this Friday. So think about it this way. I want to buy it tomorrow morning. I want to sell it for exactly what I paid for it, make 1.5% for this week, and then be cashed out and have all my money back in my possession on Monday. Can it do that? Can it stay exactly where it is? Because right now the stock's at 357.55. So where do we need it to be on Friday? 357.50. It doesn't have to move at all. Stay exactly where it is or go higher. Remember, stocks only go 3 directions. Up, down, or nowhere. They call it sideways. I call it nowhere. It just stays exactly where it is. So here's the thing. It goes 3 different directions. So if it goes up, great. If it stays exactly where it is, great. This thing can even go down just a tiny bit and it's still good. As long as it's above 357.50 come Friday. Or I just keep the stock and I keep rolling it every single week to get whatever the market maker is going to offer me. Think about it. You get a good company. You get to get that dividend that increases every year. Okay, remember, only companies that are consistently profitable, and they increase the dividend every single year, and they have weekly options. So I'm getting the dividend, which increases every year, and then I can trade a weekly option every single week to get extra income. Now I'm looking for 1% a week. That's 50% a year. It makes me all tingly inside. That's a little disturbing. I just realized I said that. All right, so shall we save this one too? Why not? Let's save this one. All right, let's see. Oh, get rid of all this stuff. Wow. Don't get old, folks. It's not as much fun as people make it out to be. All right, let's save this one. There it is. Yeah, I'm getting good at this. All right, I'm going to leave that one there. Bring this one down. Move this one over. Perfect. Bring it down. Love it. Now let's do this right here. Oops, do this right there. Come on. There it is. Right there. And there she is. I love it. All right, so make this bigger. There she is. Buy one covered call Adobe 100. 24 October 25. That's this coming Friday. The 357.50 call option. Profits 5.25. It's a $35,000 investment, but it is over 1.5% for the week, if that makes sense. And this makes number 5 for the week. For today. There we go. Let's go back to the screen. Yeah, I'm liking this new toy. All right. Damac Greenhouse, CLSK. Oh, Netflix gap down in after hours this evening. I know it's not a dividend king, and it is expensive, but it sure has some juicy premiums on calls and puts. Yeah. Okay, Netflix. Do you realize how much Netflix costs? Let's get out of there. Okay, so NFLX. Okay, so who said this one? Who's this? Who's KJ? All right, KJ. I'm not quite sure, KJ, if you actually read this properly. $1,200 per share. $1,200. $100 per share. Now, however much money you think I have, no, I do not have enough money to play with this game. Terribly sorry. Think about it. 100 shares at $1,200 a share? Yeah. Sorry, KJ. It's a little bit out of my price range. But he's right, though. 1,200. Look at what the 12s. Oh, wait a second. Yeah, it dropped down to 1164. So the 1165s are going for $90 a piece. Wow. Am I reading that right? $90. Let's do a little bit of math here. Let's break out the calculator. Okay, because the 1165s, okay. The 1165s are paying $90.15 per share. That's what they're paying. It's right there. Okay, the 1165s are paying $90 per share. Did you hear that? Per share. That's not per con. That's per share. $90 per share. Okay, so anyway. Let's do some math to see what that rate of return is. So that's the profit, 90.15. Well, the price of the stock is 11 divide 11.63. Comes to a grand total of 7.7% for 3 days. Well, here's the thing. Do you have enough money to play this game? Because think about it, okay? $1,163 a share. You got to get 100 of them. That's 11. What is that? 110,000? Is that right? Let's clear this. Clear. Okay, so 1165 multiplied by 100. It's $116,000 for one contract. It's great if you got that kind of money. I mean, I could do one. That's about it. I mean, let's be honest. I could do one. Maybe two. I don't know. No, but I wouldn't do that because I don't do stocks over $300 because it's a long way to fall. Think about it. Okay. Now 30. No, don't get me wrong. It's the same percentages. If I have $30 and it drops down to 1, that's a big drop. Well, it was what is that? $1,100 and it drops down to 1. Same thing. It's a 99% loss. 99% is 99%, no matter which way you look at it. All right, anyway. Yeah, sorry, dude. I don't have that much money. I don't. I ain't going to do that. All right, first stock I got for you today is Hormel. Oh. Thoughts on when whole life insurance policy makes sense as a savings vehicle. Now, Zach, totally off topic. Totally, Zach. Okay, you want to know when whole life insurance policy makes sense as a savings vehicle. That, brother, is a huge conversation. Because the nice thing about whole life insurance policy is that you can borrow against it. Hear me out for a second. So if you do it, talking about an IUL, okay, a life insurance policy. Now, an IUL is secured by an index, which could be the S&P, it can be the NASDAQ, it could be the Diamonds, it could be almost any index. There's a bunch of indexes you can choose from. So here's the thing. Let's say I drop 100 grand into one of these policies. Well, great. That's going to increase at 10%, roughly between 8 and 10% a year, uninterrupted, tax-free. Think about it. Uninterrupted, tax-free, 8 to 10% a year. That's the average. Okay, great. Now let's say you borrow, because I think the maximum they allow you to borrow is 90%. So let's say I borrow 90%. That's 90,000. Okay, so now when you borrow money against a life insurance policy, well, the $100,000 continues to grow at 10%, uninterrupted, tax-free. That's continuing to grow. Now I borrowed 90,000 out of it. Well, that 90,000 comes out of the death benefit. So now I have 100,000 gaining 8 to 10% a year. Well, wonderful. Now I have 90,000. Now let's say hypothetically I take that 90,000, I get 1% a week. That's $900 a week. That's $45,000 a year. So you get 10% uninterrupted, tax-free, okay, on the 100 grand. And then you take that 90 and you invest that at 1% per week. That's another 45,000. So that's $55,000 because, 10% of 100 grand is 10,000. So think about it. That's 55,000 possible returns, investing the same dollar twice. So in that instance, yeah, it makes sense. But that's a lot of moving parts, and you have to be able to understand it, Zach. Okay? That's exactly what I plan on doing with the new company that I'm getting ready to invest. I'm getting ready to do a new fund. So we're going to do that. We're going to take millions of dollars, and then we're going to invest in a life insurance policy that gets 10% a year, and then we're going to take all the rest of the money, and then we're going to invest it and make the 1% per week. So that way we get like 65, 75% year rate of return, and a portion of that's going to be uninterrupted tax-free. So it makes sense at that point. But you have to be able to understand exactly how it works, and then you have to have someone set it up for you properly. So like I said, there's a lot of moving parts. All right, let's get out of this. All right, what are we doing next? Selling options short is very dangerous. Jim, if you want to have a conversation I'd love to have a chat. But here's the thing, Jim, okay? I'm retired. I got nothing better to do, okay? So I buy a good quality company, number one. I sell an option, a short option, at the exact same price I paid for it, only when the stock is going to the upside. Okay? See this, Jim? Here's the high, here's the low, now she's going up. So if I jump into here and then going up, I'm only in it for a week, 5 days. So I jump in, I jump out. Where is the danger? The danger is me hitting the wrong button, which I've done 4 times this year, hit the wrong button. The stock could drop. Here the stock could shoot up. Okay, but here's the thing, Jim. I look every day, twice a day, once in the morning and once at night with you guys. So I have a good grasp on where my positions are at all times. But you are right, it is risky for people who don't know what they're doing. Okay, I'm just giving you a glimpse of what I'm doing. I'm not saying it's right for everybody, because it's not. It's slow, it's boring, it's monotonous, it's the same stocks over and over and over again. But what else is it, Jim? It's safe, it's predictable, it's consistent. Okay, so all the stocks that I do, me personally, have at least 2 decades of profits. And you can't get 2 decades of profits unless you've been in business for at least 20 years, bare minimum 20 years. Now, most companies don't get past 3 to 5 years. Like 1 in 1,000 get to 10 years. It's like 1 in 5, what is it? I don't even know the exact statistics. But how many companies actually make 20 years or more of increased profits consistently year after year after year? So, Jim, if I'm buying only good quality companies, I'm selling a covered call at the exact same price I paid for it, and I only do it when the stock is in an upward trend. I get in on a Monday, and I like to be out on Friday. That's ideal. Doesn't always work that way. Sometimes I roll forward if the numbers work right. But be on Jim's side here for a second. He is right. If you don't know what you're doing, you can lose. Okay, and it's as simple as that. Okay, if you don't know what you're doing, if you think this is over your head, then don't do it. It's as simple as that. If it doesn't make sense, don't do it. Never, that's rule number 1, never buy a stock you don't want to hold on to long term. So, Jim, if I buy a stock that I like and I sell a short option against it, well, that's cash flow coming in. I don't see what the danger is if it's a stock that I like and I don't mind holding. So if I buy it at 18.40 and it drops down to 16.40, that's a $2 loss. But Jim, it's not a loss unless I agree to sell it for less than what I paid for it. And if it's a stock that I'm willing to buy and own for the long term, this 1 week play doesn't mean anything. Because stocks go up, they go down, they go up, they go down. If you take a look at the 52-week high and the 52-week low and compare them, well, that's what they do every single year. 52-week high, 52-week low. What is the momentum? Why are you buying it in the first place? Remember rule number 1? Never buy something you do not want to own long term. So, Jim, you're kind of right, but then again, kind of wrong. Okay, for those who don't know how to invest with options, you shouldn't do it. And yes, it can be risky if you don't know what you're doing. Okay, hopefully that makes sense there, Mr. Jim. But thank you for chiming in. Righty, Fufu wants to take a look at Hormel. Hormel, by the way, Hormel HRL is a dividend king, which means, well, number one, they've been in business for over 100 years. Good company, Jim, in business over 100 years. Also, Jim, a dividend king, which means 5 decades of increased profits every single year, higher and higher and higher and higher profits. I don't see the risk there, Jim. If I buy it at 24 and I sell a short-term option about it, where's my risk? Explain to me, Jim, where is my risk? If I buy Hormel, a company that's over 100 years old, if I buy it at 24, which is the current price, 24.08, and then I sell it to someone at 24, where's my risk? Okay, I wouldn't buy Hormel anyway. You know why? Take a look at this. 0, 0, 0, 0. So if you're wrong and it does go down, you're not getting anything. So no, I wouldn't buy Hormel only because the numbers are horrible. But there are other companies that are over 100 years old that have better numbers. All right, what are we doing now? Okay, so no to Hormel only because the numbers look terrible. Mr. Unemployed, thank you there, Mr. Unemployed. Thank you, thank you, thank you. Do you record and replay these? Okay, Steve, okay, you've been here before. Okay, thank you for coming back. Thank you there, Mr. Steve. They are recorded. Before we go on, let me just give you a brief interruption. It is 10:31 p.m. on a Tuesday night, October 21st, 2025. So as I am saying that, you know that it is live at this moment in time. So 21st of October, 10:32 p.m. So if you are listening or watching other than tonight, October 21st, October 21st, it's a recording. But at this moment, it is live. So to answer your question, Mr. Steve, on YouTube, I have 1,200 videos. This will be 1,201. Okay? I don't know what the number is exactly, but it is over 1,200. But it is being recorded. So you can go back and rewatch it again if you have any questions. What screen is this? Is it just a monitor or a TV as well? Well, C-Wide Spinner, this is called a Vibe board. It's a fancy whiteboard. It's a computer and a monitor, and I don't think it's a television. I don't know. I've never even tried to use it as a television. I don't really watch much TV. I'm a movie watcher, okay? And besides, TV's bombarded with commercials. I hate commercials. All right. What do we have next? I'm fitting. Got to run. Thank you. Class in session. Mr. Nick, how are you today? David, how you doing? Mr. Kessie, good evening. Studio TLB, good evening, good evening, good evening. Nick, what do you like to trade on, Apple or Microsoft? Funny thing you say about that, Mr. Nick, because see, every one of my computers are actually iPhones. Okay, so I got 8 iPhones, 8 iPhones, and one. I think it's a Lenovo. So, yeah. So that's Microsoft down there, MOS-DOS, and that is all Apple. So I'm going to mix Apple and Microsoft. So I got kind of both. Would you say Costco is consistently profitable even though the dividend spikes short term? Well, Fufu, let's check it out. C-O-S-T, Costco. Wait a second. Why did that just jump to there? 86. Okay, 2005. All right. You ready, Fufu? Let's check this out. 2005, 11, 13, 14. Whoops. 16, 18, 20. 24, 27, 31, 35, 40, 45, 50, 57, 65, 70, 79, 90, 102, 116, 130. Ding, 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 ding. We got another winner. Yes, we do, we do, we do. However, foo-foo, this thing is $937 per share. So even though the dividends consistently increase year after year after year, can you really buy 100 shares at $937 a share? Not everybody can do that. I mean, I could, but I'm not going to. I don't do stocks over three. Actually, I don't do stocks over 280, something like that. So that answer your question? All right. 10:35. Let's see how many questions we can get before I get out of my chair again. SB1, how are you doing today? The Aguila, how are you doing? Solomon Goldman, DEFT. What is that? Solomon, DEFT. Never heard of it. DEFT. Nope, I don't do monthlies. See this? Whoops. Okay. Whoops. Yeah, I don't do monthlies. Sorry. All right, next. JFM, how today? Thaddeus, 1% a week. What stock you invest in? Thaddeus, are you ready? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and then Warren Buffett's list. That's about 300 companies right there, Thaddeus. 300 to choose from. SB 1981, HBANP. What the hell is that? Seriously, what is that? HBANP. Huntington Bank shares. Has no option, so why are we looking at this? Kate, I sent you my number via contact me on your website and ask for my 6-year-old. I'm not sure you got it. Kate, I remember, and I called and left you a message. Okay, because I remember reading it, because you said you were interested in doing it with your daughter because she was interested, and you sent me a number. I called and I left you a message. So I don't save phone numbers. Okay, so once I call, I don't have your number again. So you got to send me your number again if you want me to call again. Okay, but I did call. Megan, good evening. Titan, how are you? Beautifully complicated life. Thank you for that. Grim, what company is this that you have on the charts? Okay, Grim, I'm going to apologize. And thank you for the pumpkin, by the way. I'm going to apologize just a smidge. Okay? Because I got 6 screens with 6 different sets of questions. Okay, so I can't get to each and every one of them. All right, so I don't know which one it was you were talking about when you sent that. Thank you for that, Miss Kate. That was very nice of you. Alrighty. Where are we? Ooh, Kate wants to take a look at CL. Ooh, Colgate-Palmolive. Got 211. Ooh, look at that. You got the bottom right here. She's turning around going up. But what happened in the last 2 days? Well, let's zoom in and find out. Last 30 days. Okay, Kate, look at that. Your 30-day high. She drops down to here. Okay, 5 days up. Now she's pulling back. Don't get me wrong, Kate. I love Colgate-Palmolive. It is a dividend king. It is over 100 years old. And we all know who Colgate-Palmolive is. Okay? No, John says, no, TS is fake. TS. I have no idea what TS means. John, what does TS mean? Okay? I don't know. John said TS is fake. Okay, so I'm terribly sorry, Kate. I do love Colgate-Palmolive. I do. But at the bottom here, shot up 4 days, and then she pulled back for 2, which means not the greatest time to jump in. No, all right, we already did that one. Thank you there, John. Not quite sure what you mean, but hey, whatever. Oh, Jamil, love watching your show, Uncle James. Yay, that's me. Captain Triangle, Captain Triage. Texas Instruments, I like the price after the drop and a decent dividend. Let's check it out, Cap. Texas, I actually have Texas Instruments, TXN. Do. Ooh, look at this right here. That looks awesome. Let's zoom in and check it out. I'm gonna get out of my seat for this one. Hey, sweet dad, do you like that? I love this thing. It says Kohl. Anyway, it brings out my inner child. It does. Okay, so Captain Triage. Let's take a look at this. Here's the high of the year. Here's the low of the year. Here's where it was a year ago. Here's where it is now. Look at this. Up, down, up, down. Now she's going back up again. I mean, that's pretty easy to see, right? 5 things. The high, the low, where was it, where is it, what's the direction? Well, great. I love this right here. That looks awesome. But before we move on, is it going to give me 1%? Now, tomorrow's Wednesday, so you only got 3 days left. So if we can't get 1% tomorrow, maybe we can get it for next week. So let's see. 180.81. Uh-oh. She dropped to 165 after hours. Because this price here, the 180.81, was during market hours. The market closed and this was the price. Well, this here is after market hours. It says 165. So this is the part where I say, terribly sorry, I can't give you the numbers because this here only gives market hour numbers. Sorry, Captain Triage. Don't get me wrong, I have some Texas Instruments, okay? But after hours, she did drop. So I have no idea what the numbers are going to be tomorrow morning. But right now, 165.60 is the current price. So the 165s are going, is that right? 1520? That can't be right. That's a crazy number. Let's do some math. Hold on, who came up with this one? Captain Triage. Let's take a look. Okay, so the 165s, because remember, this is the price right here, right now. That's after market hours. And this is the price right now, the 165 is going for 1520. So let's take 1520 and divide it by the current stock price, 165.60. 165.60. It gives a grand total of 9%. Well, that's a lot. Well, I already own Texas Instruments, but here's the thing. My Texas Instruments doesn't show that big drop it just took. So tomorrow morning, yeah, I'll be pleasantly or unpleasantly surprised. That being said. So it wouldn't do us any good to take a look at Texas Instruments because tomorrow morning when the market opens, all these numbers are going to be different to a point where here's the close, well, here's the close, and here's the reality now. How can that be low? I need new cords for my phones. And I just got new cords that aren't working for squat. All right, so that being said, what is next? Next, all right. D-Nut. Isn't that Krispy Kreme? D-Nut? Oh. Some Dog Millionaire. Some Dog Millionaire. D-Nut. D-N-U-T. Krispy Kreme. Interesting. Okay. It's at 371. After hours, it's at 420. So whatever numbers I show you aren't going to be realistic. 420. Oh, okay. Interesting. Let's take a look to see what kind of dividends Krispy Kreme has been paying. DNUT. Let's check it out, because I'm kind of curious. Okay. Hold on a second. Some Dog Millionaire, did you know that D-Nut only has dividends to 2021? That's only 4 years. 4 years doesn't help at all. So let's get out of that one. So we're going to say no politely to D-Nut. All right, next on the list. All right. Alex, usually rolling the same expiration date doesn't help. No, it does not. Nice haircut. Thank you, Rugworks. My Halliburton rocketed today, and I'm definitely getting called away. Okay, nothing wrong with that at all. Okay, Easy Money, Beyond Meat. Yeah, no, they have not been around 20 years. I know that. Easy Money, not profitable. Yep, got that one. Encourage more user. Easy Money says gambling. Thank you there, Easy Money. K-Van, sold my bond fund today and make 1% weekly instead. See, here's something funny about that, K-Van. I got a friend of mine. His mother passed and left him and his brothers a whole bunch of money. First thing he did, went out and bought a house for cash. Okay, fine. And then he took the rest of the money and he put it into an annuity. And he was all happy. He was getting 3% a year. So I said, hold on a second. 3% a year? I said, what if I could show you how to get 3% a month? And his wife's eyes lit up because his wife was an actuary. I don't know if you know what an actuary is. She plays with numbers all day long. So it took me about 15 minutes to show his wife what they could do with this. So she immediately went out, sold the annuity, took the minor loss, and now she's getting well over 3% a month, every single month. And every time I see her, you got a huge smile and a huge hug every time. So I'm not going to agree with you what you did, but a friend of mine did the exact same thing. And it wasn't a bond fund. It was an annuity that he did. And not advice. It's not a tip. Nothing like that. I didn't get the message. I'll message you again. Thank you. All right, Kate. NU, isn't that New Core or New Skin? New Core, New Skin. Let's find out. NU. Mr. Wales. Ooh, I love it. I love it, love it, love it when somebody tells me I can't do what I'm doing. Mr. Wales, good evening, and how are you today? Now, I'm kind of curious, Mr. Wales. Would you like to call on the phone and explain to me why you think I cannot get 1% every week? You talk a lot but say nothing. Show us your statements. Oh, you're a grifter. You know what a grifter is, Mr. Wales? It is someone who sells something that is useless. Have you once heard me say anything about selling anything to anybody? Not once have I asked for money, and not once have I said, I've got something to sell you. Nope, you didn't hear me say that at all. You want to see my statement? Let me think. I'm trying to think why I should appease to you, because apparently you don't understand the way numbers work. Because let me see if I can explain something to you. Okay, hold on a second. Let's go here. Let's go here. Let's go there. Let's go. Whoops. There we go. Alrighty. Mr. Wales. Where did he go? He just disappeared. All right, here we go, right here. Mr. Wills, so let me see. Okay, Mr. Wills, this is, oh, right here. Let's check this out, TSLL. Do you see that right there, TSLL? All right, so I bought 200 shares TSLL at $20.20. That's the number right there, $20.20. I sold the $20 call, picked up $1.77. So for the fun of it, let's just see what that comes to. Get out my calculator, and $1.77 divided by the purchase price, $20.20. $20.20 comes to a grand total of, oh, let me think, Mr. Wales, that's 8.7% for 1 week. So let me see if I can get it a little clearer for you. Okay. All right, let's see if I can do it this way. Okay, 200 shares, 2 contracts, 24 October, which is this Friday. Okay, that all comes up to a very nice rate of return. However, that's just one of them. What else did we do? Oh, look at this. VFC, 17 October. That was last week. 500 shares, $14.69. Now, $14.69, I sold the 1450s, picked up 41 cents. So effectively, my walkaway price is $14.91. All right, so let's get rid of all this. Okay, so if I'm selling it at $14.50 and I got 41 cents, that's $14.91. Okay, so let's do a little bit of math. All right, so $14.91 minus $14.69. Let's go. Clear. $14.91 minus, what was that? $14.69. $14.69 gives me a grand total of 22 cents. Big whoop. What did I pay for the stock? $14.69. So let's divide it by $14.69. Divide 14.69 comes to a grand total of 1.49%. Now, I don't know about you, but 1.49% is more than 1%. And it's 500, well, let's get rid of this. And it's 500 shares. So 500 shares multiplied by, what was that number again? 22. So it's 22 cents a share. Okay, clear. So 22 multiply 5 contract. Oops. No, clear. 22 multiply 5 contracts is that's only $110. Big deal. Okay, so that's that one. That's that one. I mean, I could keep doing this all day long. Okay, so here, well, let's get rid of this. I don't even know why I'm entertaining you. You know what? You don't believe me, you don't have to. You don't have to be here, Mr. Wells. You don't believe it? Hey, fine, awesome, wonderful. Just, you know, have something nice to say, don't say anything at all. All right, who is this? Start fresh. I've been doing over 1% weekly the last 3 months, thanks to apply the simplicity of Mr. James. Yay! Thank you, dear Start Fresh. Crypto Jiggy, thank you, that's cool. Cliff Brunham, the last statement he showed, you were losing more than you were making, but you own the asset. Okay, Cliff, you have to tell me which one that is. But you're right. I bought it at $4.69 and I sold it, sorry, $14.69 and I sold it at $14.50. You're right. I lost how much? 19 cents. So I take the 19 cents from the 41 I make and I still made 22-cent profit. 22-cent profit on the $14 stock is 1.5%. Cliff, that was quick. You did catch that, and you're absolutely right. Hold on. Okay, what Cliff is saying is, I paid $14.69 for the stock, and I sold the stock for $14.50. So I'm losing 19 cents. He's absolutely right. But here's the thing. The 19 cents, I'm going to subtract it from the 41 cents that I captured. Well, that 49 cents minus 19 is 22. Now, 22 cents on a $14.50 stock is over 1.5%, Cliff. So it's a math problem. What am I buying it for? $14.69. What am I selling it for? $14.50. What did I collect? $41. You do all the math, what do I walk away with? I walk away with a lousy, measly 22 cents. Now, 22 cents on a $14 stock is over 1.5% for 1 week. That makes sense? It's all a math problem. What am I buying? What am I selling? What am I walking away with? These are all simple questions. It's simple to answer with just a little bit of math. Okay, let's get out of this. I'm not going to entertain this boy anymore. Activity positions. All right, that being said, we've got 5 minutes left. I'm going to see if I can answer as many questions as possible before the last 5 minutes. And you're right, Cliff, I do own the asset, okay? All right, okay, K-Van, do you do rolling orders sometimes not get filled? If so, why? K-Van, yeah, that is true. Now, if so, why is, are you asking the market maker to give you the market price or a limit order? Now, a limit order means this is what I want and I'm not willing to take any less. That's a limit order. And sometimes they don't fill. But a market order, they do fill. Let's say if Mr. Wonderful has something to say. Cliff, the last balance you showed, you were losing more than you were making, but own the stock. Yeah, Cliff, you already said that. Jordan, Gemini. Jordan, you got to give me the ticker symbol for Gemini. Why would you do 1450 versus the 15? Safety. Okay? I like goat cheese. Okay, the reason I did the 1450 as opposed to the 15 is strictly safety. Because 1450 is a safer trade. Now 15 would have been more profitable, but I'm looking for safety. I'm not looking for profitability. Okay? Jordan, you got to actually tell me what the ticker symbol for Gemini is because I don't even know who they are. Cleon, what is the name of that stock? D-Nut? That's a Krispy Kreme. The last balance, okay, Cliff, we already did that one. Okay, Jordan, you already said that. Okay, Gemini stock, I don't know. Jordan, I don't know the ticker symbol for Gemini. I've never heard of it. I have no idea what they do. Game dev, sir. Oh, GMI. Okay, no, let's take it. Gemini. G-E-M-I. Okay, so why is it that we don't have any more information on this? Okay, is it a 4-month-old, a 1-month-old stock? Oh, hold on, let's go to Yahoo Finance and put in G-E-M-I, okay? G-E-M-I. Oh, Gemini Space Station. Okay. Terribly sorry, dude. There are no dividends. Okay. All right. What do we have here? All right. What we have here. All right. Which expiration date do you choose? I usually go the closest one. Okay. 5 days or less. So if it's 5 days or less, wait a minute. If it's 5 days, I do it for the weekly. I like gold cheese. What if I keep the stock and continue to cover calls? Do you go higher then? Okay, I like goat cheese. It's always going to be a numbers game. Always. Okay? So as the days go by, stocks go up, stocks go down. And as stocks go up and stocks go down, so do the option prices. Great content, great selling covered call on great companies. Thank you there, Cliff. So Cliff, so I like goat cheese. It's always going to be the same. What am I buying it for? What am I selling? What am I collecting? Where does it look like the stock is going next? Okay? And then it's always a numbers game after that. Does it make sense to hold on to it? Or does it make sense to let it go and pick up something else and then come back to it once it drops again? Because stocks shoot up. Yeah, you can take that right up. When it gets to the top, do you want to hold on to it for the drop? Because they all do the same thing. They go up, get to a top, and then they come down. See, I like to ride it on its way up. Grab my 1 or 2%, get rid of it, because once it gets to the top and comes back down, I want nothing to do with it until it gets back down and turns around to go back up again. See, I will trade the same stock over and over and over and over again as long as I keep making money on it. Okay, so let's go over here. BBWI. We don't have any more time to take a look at any more stocks because it's 11 o'clock. I'm usually out of here by now. But before I go, let's take a look at those last stocks we did pick up. All right. All right. So up there. Here they are. Let's do this. Take this one, put it right there. Take this one, put it right there, and go like that. Yeah, these are the 5 that we found tonight. Just the 5 we found tonight. Now, I do this every single night. This is the first time I've done this now because my son had to come up to show me how to use this thing. All right, there's still a lot about it that I don't know, and I said, all right, hold on, let me do one thing at a time. Superlative. Can you cover call get assigned at any time during the week? Absolutely. Now, the interesting thing about U.S. markets and the U.S. options is they can be exercised anytime, anywhere. Now, European and overseas options, they can only be exercised on the date of expiration. That's it. So here's the thing. When you are doing your covered call, make sure you do it in a manner in which, if it does get called away, that you have a profit. Because if you have a profit, all right, here's the thing. If I buy it at 2024 and I sell it 2025, 2024, and I sell it 2050, okay, and it gets called away, fine, because I'm making a profit. I always make sure every single trade I do has the profit already built in. So if it does get called away, I get a profit. And then I move on to the next stock. Does all these stocks give you weekly dividends? Okay, Cleon, I never, ever, ever once said anything about weekly dividends. I'm talking about weekly stock options, okay, on dividend stocks. So some of the stocks pay dividends on a monthly basis. Some pay on a quarterly basis. Some pay once every 6 months, and some pay once a year. Yeah, but who cares takes it? Wait a minute. Who cares takes it? I'm in the pro. I have no idea what that means. Yeah, who cares takes my stock? I'm in the, okay. All right, what do we have over here? ELIFN, I have no idea there. This year, gold has doubled. Yeah, Pete, I'm aware of that. Quantum computing stocks. No, I don't do that. What do you think about Adobe? We already did Adobe. It was the very first one we did, and I believe it's right there. Adobe is the first one we did tonight. I meant to say, who cares? Take my stocks. We're in a profit if it gets called away. Absolutely. I'm going to agree with you. I'm going to agree with you, Cliff. Ford dividend payout ratio is about 200%. Okay, user 514766625. Okay, whatever your name is. Okay, why do I like Ford? Well, here you go. Ford has been in business for over 100 years. I don't foresee Ford going out of business. Okay, I also, come on, plug. There we go. Okay, Ford has been in business for over 200 years. Okay, over 100 years. Okay, the book value of Ford is actually less than the stock price. The revenue per share is a lot higher than the stock price. So there's a lot of things good about Ford, just as like there's a lot of things bad about Ford. I like goat cheese. Resolve AI, please. Okay, HMC Carol. How are you doing, HMC Carol? I have no idea what you mean, resolve AI, please. I have no idea what that means. You need to explain it to me in a manner which I'll understand. I like goat cheese. Thank you. I've been learning for the past few months. What you say makes a lot of sense. Woohoo! Thank you there, sir. All right, so let's do this right here. Don't croak on me now. I haven't learned this yet. Yeah. This is to the T yet. Oh, okay. All right. Thanks. And yes, it is herbal tea to help out with whatever this is. Johnson & Johnson pays every 3 months. Yes, I'm well aware of that. Johnson & Johnson also has a very crappy premium, usually never 1%. Jen Pinka, back again. How are you doing today? RZLV. Carol, what the heck is that, RZLV? RZLV. Now, you're new here, Carol, so let me give you this. I'm going to say no, Carol, right off the bat. And you know why, Carol? This is why. Are you ready? Uh-oh. Hold tight. Hold tight, Carol. Okay, this is why I'm saying no to RZLV. Are you ready? This thing was at $1 back in April. $1. Carol, it was at $1 in April. So you might be thinking, oh, great, it's $1. Okay, that's not the way I look at it. The way I look at it, if this thing is $1 in April, how can this thing possibly have 2 decades of increased profits? 20 years of increased profits if it was $1 6 months ago. I don't see it. If you're willing, VFC, please. I know it's late. Yeah, well, VFC, didn't we look at that yesterday? And plus, it's past 11. Hey, 86. Dude, I'm just getting ready to leave. Thanks. You're welcome there, Carol. So let's go back to here. Back to there. And there you go. So I'm going to leave you with that. Hopefully you guys can take a look at. If you didn't know, this screen here is live on YouTube. Okay? So that being said, you guys have a great night, and we'll see you again tomorrow. Yay! The crowd goes wild. All right, anyway, you guys have a great night. See you all tomorrow. And now the end is near, and so I face the final curtain. My friends, I'll say it clear. I'll state my case, for which I'm certain. I've lived. Why isn't this turning off? I've lived a life that's full. I traveled each and every highway and more, much more than this. I